Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to run through Twitter, see what people are sharing. I did share quite a bit of charts myself, so we'll go over some things that I think look pretty good and pretty interesting. It's generally related to three different topics: finance, wealth building, and/or commodity-related topics. Let's dive in there. Let's see what people are talking about and sharing. You can follow me at finding_finance, and you can join our community at finding-value.com. That's where I go into individual companies, individual sectors, deeper into this stuff. And I use technical analysis, ratios, fundamental analysis. I'm a hybrid investor to find what I think are some of the best opportunities in the market for playing this commodity bull market. We still have a discount coupon code going on, LEAP. If you're interested, look at the description link below. So we've got myself posting. While gold is slapping everyone in the face with gains, miners are still cheap. What do you guys think? You think the miners are going to go higher? Put in the comments section what you guys think. What I see is a downtrend in the ratio for GDX versus gold futures pricing. I see a stage one bottom, and then I think this is going to go and work its way on up into stage two. We are very early in this move. We are very cheap. And the opportunities here are probably the best they've ever been in the history of the market for gold. The history, I said, yes, the history going back. This is probably very similar to the late 60s, early 70s. And we could see some vast outperformance of GDX and maybe even some of these junior companies, GDXJ. I just use GDX in this example against gold. But I mean, guys, this is very, very cheap compared to history. So gold to the M2 money supply, gold to total bank credit, and gold to the Dow Jones Industrial Average. So gold versus the M2 money supply, we've got a downtrend line that's broken, and it's starting to work its way on up in favor of gold outperforming the M2 money supply. What does this mean? During certain market conditions, gold accounts for the M2 money supply. What that does is money gets printed, it goes into assets in the market. Under certain market conditions, those dollars in the system go away from bonds and away from stocks and prefer gold under certain market conditions. What I see is I see a big move up in the 70s and all the way up to 80. We went into a big decline, which is a double bottom in gold versus the M2 money supply. This is a double bottom. We've broken out of this double bottom, working our way back up, and we could work our way to levels maybe even similar to late 70s, early 80s. That means that gold and the market conditions that we are potentially entering right now is going to be favorable, more so than other times in history. Gold versus the total bank credit, that is also another double bottom. We saw that in the 70s, early 80s, that gold counted for more of total bank credit. We've got the same thing going on as the M2 money supply, and we've broken the downtrend line. I just don't have the downtrend line drawn in on this one. Gold versus Dow Jones, another double bottom. So against these other assets, the money is not in gold. It's over in the Dow Jones. It's over in other asset classes. And the Dow Jones, I think, received a lot of this money with the declining interest rate environment. With the increasing interest rate environment and things changing with the market conditions, I think more money is going to transfer into gold going forward. And if we zoom in on this right-hand side here, we are starting to break that downtrend line for favorable for gold against the Dow Jones Industrial Average. So copper's playing ball too. I like to look out the side view mirrors, make sure I'm looking at a bunch of different commodities. And again, commodities are strong like bull, and we are breaking for copper futures to the upside, and they are extending that going forward for hopefully Monday. We're up pre-market. And again, on all of these, well, we'll look at gold here shortly too. So I say it's a bird, it's a plane, it's silver breaking out. A pretty rare sighting. Hopefully, we get a strong close for tomorrow on Monday. And I'm doing this on Sunday night. So silver, I see it's up in the pre-market, and hopefully it can close Monday strong. That's what everybody should be hoping for. Silver is breaking out of its downtrend line, and this could be, and I don't know if it is for sure, but it could be the beginning of a very big move in silver. Gold's already broken out, gold's flying, and I'll show you a chart of what gold looks like here. And silver's just getting started. It's just getting started. And yes, I still like platinum, I still like palladium, but those work very well under inflationary, platinum does, under inflationary conditions. And right now, I think silver and potentially gold could be our leaders here. And then I think we'll see platinum work its way up with crude oil. So coming down, we've got gold just ripping here. And I said, can gold close strong tomorrow for Monday? Looks like a pretty strong start. And look at this start here, guys. We gapped up and are just running up in gold. Maybe that's the Chinese market pushing it higher. Maybe it's us running out of gold to hold this thing down. I don't know. It looks pretty strong. I have a reading here of $2,273. That's what it currently is at when I'm looking at it. Coming on down. Construction still looks strong. Construction employment and spending are below. So all employee construction is continuing to go up. That is generally not what we see during a recession or before a recession. Generally, you see this decline during recessions. Almost every time in history, recession, 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 recession here. This was also a recession as it pulled on back in 2000. We haven't pulled back, so I don't know if we've got a recession here, guys. Here's total residential construction that pulled back here in 22, 23, and now it's working its way back up again. So that looks better. And then total construction spending just of everything, not residential, it's everything. We've got a nice left to right chart from 2011 onward. Just a very strong move. This is the PPI to CPI ratio. To me, it looks like a double bottom. And now we're watching for a move higher. This means inflation and the potential for a lot of it. So the producer price index, whenever the producer price index goes up faster than the consumer price index, that is when you see inflation. So inflation occurred in the 70s here, and then it stayed elevated. So the transfer of PPI to CPI was roughly the same the second half of the 70s. Then early 80s, we declined. The decline here was great for stocks. S&P, Dow, those types of stocks. We've hit a double bottom. The bull market in 2002 to 2008 is this big bull market in commodities here. We had another big surge from 2020 upward. We have strong resistance up here. We've pulled on back from that resistance. And now I'm looking for a move higher here where the PPI might outpace the CPI, stating that there's going to be inflation. That's what we're looking for next. Rolling down, Peter says gold is continuing its record-breaking run tonight, rising another $18, breaking above the $2,250 level. Gold is not just another commodity. This significant rise has meaning. Unfortunately, the warning bell gold is falling on mainly on deaf ears. Logan says we had rising foreclosure data, 05, 06, 07, 08. Then the job loss recession happened in 2008, in 08 to 2011. New listings data ran 250,000 to 400,000 per week, forced credit-stressed sellers that can't buy homes. That all changed after 2010. And there's that big run up of foreclosures and bankruptcies. And now we're at no man's land way down here, um, at a very low level. And that was in response to, looks like, 07, 09, where the wealthy realized that prices were too high, got out and waited for it to correct itself. And most of these people have no idea what they're talking about. This is the data. You need, as a successful investor, what you need to do is you need to know this data, and you need to know what that looks like for the sector. And you got to be able to read it accurately. A lot of these people who are looking at real estate data, in my opinion, have no idea how to look at data, how to read it, and then draw appropriate conclusions from it. That's the problem. Trend Spider says there's a million reasons for insiders to sell, but only one reason to buy. And this is Occidental Petroleum Insider Actions. Buy, 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 all in the corner here. Almost like they're technical analysis professionals. I also purchased a lot of stock, not in Oxy, but in a lot of these oil companies at the same spots that these guys are buying. Same thing. Accidentally retired. He says, would you rather make $300,000 but have to work 7 days a week, or make 50,000 but only have to work 20 hours a week? I would rather make the 300,000, work 7 days a week, but I'd only work an hour or two a day, and that would make me working less than this. That's what I would do, and yeah, that's what I would prefer to do. I mean, 50,000, that's just not going to cut it for me. I'd rather do the 300. And I think that's all I've got for this session. I know it's kind of short, but I didn't really see much on Twitter that I really wanted to share there. It was kind of all blah. We've seen a lot of the charts already this weekend, so all I'm going to say is hopefully gold can keep going up. Hopefully silver gets moving here. I've been in this, I've been in it for a while. I've been buying the physical for a long time, and I think the mining companies look pretty good here too. So hopefully it rips, and then we get a big move out of this thing. Let me know what you guys think. I'd like to know what your guys' opinion are. But that's all I've got for today. We'll catch you next time. This is Finding Value.